Hey everyone, Tim Knight here. Well, generally speaking, I gotta say that I'm starting to kind of lose hope for any sort of bear market to take hold. It may seem like kind of a sudden decision on my part, but the thing is that there is reason after reason after reason after reason after reason why we should be turning down, and it's just not happening. It just isn't happening. And the kind of core items I've been watching in a very broad perspective aren't doing what they would need to do in order to fuel any sort of downturn. So it's disappointing because the more charts I look at, the more I reach that conclusion. We start here with the euro dollar, or the euro, excuse me, and this is an intraday graph, but this is substantially stronger than I would have liked to have seen. I've beaten the analog just to death, but as you can see here, we are. I really would have liked to have seen a falling away, particularly now that the whole Greek bailout thing was done, but it's just not happening. Today was up almost a full percent. We are really challenging this trend line's integrity. It's just looking risky. Now, the euro has had spikes before, such as this one. They tend to have been strictly news-based, though, so anyway, starting to look a little grim in that respect. The dollar index, quite understandably, is turning south, which we also would not want to see given the kind of bearish premise, down about 0.75% today. This had been formerly shaping up into a really nice pattern. A little sloppy, but not bad. But it's really starting to fall to pieces. This is no longer a clean bullish pattern at all. It would take some kind of core change for this to really flip around into to what needs to happen in order for the bearish equity argument to make sense. Added to which, if you look at really bullish instruments like, say, DRN, this is acting very much like a nice setup on the bull side. We've got very clean inverted head and shoulders pattern, a push higher, a retracement back to the neckline, and then today up about 4% on this. Added to which, there are some individual equity stories that are really shining, like Salesforce, for example, right now. Look at this, up 12+%. It's been climbing steadily all after hours. It started off up 3% and then just non-stop climbing ever since. Let's see, what other grim news can we share? I've got a bunch of symbols chosen here. Looking at the ES, we have two times pushed beneath that trend line, and in each instance we've just really rallied higher. It looked early this morning that things were starting to go nicely, and then up they went. Much more dangerous, I think, is this one right here, the NQ. This has been leading the way for months now, and it's to my way of thinking, there's a lot of indexes that are just about to go into just full-on breakout mode into uncharted territory, and you can see the building complacency reflected in the VIX. I mean, look at this, 16.8 now, just a full-on plunge today. So people are getting more and more and more comfortable with the market. Looking at the Nasdaq Composite, you can see here the breakout, which took place in a big way on Feb 3, has been sustained ever since. It started to weaken over the past 3 days, and today it kind of turned around that. And likewise in the NDX, kind of the same story. Yes, we're approaching some very large channels, like this one. So, we could be in the equivalent of around here or so, if you want to use October 2007 as a guide. And there was a little while longer to go before it really started to break down. But, this channel that's a pretty thin reed to hang the notion of a turnaround or a turn south on just one data point. It's really, really not very compelling. This is mislabeled from the data feed. I'll never see this fixed. Charlotte Home Price Index. It's really the commodity index, but we're seeing, thanks to oil, a breakout happen here. This isn't broken yet, but I'm even watching with some nervousness things like the Gold Bugs Index. This line really needs to hold in order to have a firm argument for this analog to bear out. Dow Jones Industrial also approaching pretty major resistance here. It isn't very far away at all. Looks to be about maybe 200 points from here on the Dow, beneath that channel. But this is a pretty well-formed base here, and we are nicely above it. Touched it almost perfectly today. Simply stated, even a decently up day on Friday would profoundly damage even further the entire bearish premise, particularly with the small caps here, because you're right at the cusp of breaking above this trend line, which at that point it's a 40-point ride up to the next meaningful technical level, up at the old May 2nd high. This is getting a little redundant here. Just chart after chart is basically right on the threshold of just really zooming higher. The S&P extremely close to matching its May 2nd high, and also extremely close to pushing past this Fibonacci retracement level. Utilities still kind of holding the line. It's sort of weird because interest rates aren't doing exactly what you would think on a day like this. The utilities are still in a formation which is amenable to bearish. On the other hand, the broker-dealer index has been quite strong of late, up over 2% today, and the next technical barrier to it is this ascending trend line. As I'd mentioned, interest rates are acting a little odd considering what's going on. Here we have the 10-year T-note falling about 1% today, and so not surprisingly, actually a little surprising, TLT was barely up at all from yesterday's close, but given today's strength, you would have expected bonds to sell off, but a little bit of a split going on here. ZBH reflects this. We can see that we're not having the kind of breakdown that you would have expected, but they remain trapped in this really tight, boring range that's been going on for months and months and months now. I'm sure bond traders are just going crazy trying to get some direction on this. I read an interesting little fun fact that the rise in gasoline prices basically completely eradicates the whole payroll tax cut that added so much to the deficit. So in spite of that, no one really seems to care. There's a huge surtax going on in society, our American economy, based upon very expensive fuel, but no one really seems to be taking much notice of it. This is another very healthy bullish formation, and that strength was reflected likewise in the USO today, up nearly 2%. I've been kind of going in and out of GDX, small positions on a pretty regular basis. I have a quite small GDX short right now, but naturally I've got to stop there at 58.11. There's been a real rush into precious metals lately because of the weakness in the US dollar. So, that's really going to be it from me today. I think that it's getting dangerously close to an honest-to-goodness bull market at this point, and it would take something really core to change for us to really resume any kind of meaningful breakdown. This year hasn't had a single, I don't think there's been a single instance of a day where the S&P has dropped more than about 0.75%. And the arguments for the bearish market just kind of are falling one by one. So, take a step back, and there's plenty of good bullish opportunities out there, certainly, in terms of individual stocks. But it is, I must say, a little disappointing if this very clean analog based upon this principal chart here doesn't pan out, because it's such a good looking chart. But, the market's going to do what it wants to do. Hope I didn't impress too many of you out there. But that's it from me, and I will see you on Friday. We'll see what that day holds for us. It'll be pretty key, I would imagine. Bye.